Hi, this is PR Sundar. Welcome to Post Market Report sponsored by Delta.exchange, a leading crypto trading platform. Today, the markets were highly volatile and the GIF Nifty indicated about 150 point gap down, and we gapped down almost the same amount. Then we were choppy. Then in the afternoon, suddenly there was a huge short covering. And Nifty shot up nearly 140 points from the day's low. The Bank Nifty also shot up. And from the breakout time, Bank Nifty shot up 300 points and then later equally fell. Everybody thought IT sector will be underperforming today, but in fact today the banking sector even more underperformance today. Why? That's because TCS came out with the results. Markets were not happy. And maybe I just tweeted today, TCS came out with results and people thought the entire IT companies will declare bad results. Then Infosys came out with results. Then people are thinking not all the IT companies, now all the companies will be declaring bad results. That's why all the stocks, all the index heavyweights came under selling pressure today. The only index heavyweight that was in the green was TCS, that was trying to recover the huge losses it made yesterday. So other than that, all other stocks and all the banking stocks fell, and HDFC Bank particularly was volatile. Why? Because the results on Sunday. So this week it was the week of IT, and next week it will be the week for banking stocks. If HDFC Bank result is good, then people will assume that all the banks will come out with good results. If HDFC Bank result is bad, the people will assume all the banks will come out with bad results. So accordingly, Bank Nifty is likely to move violently next week. And today in US markets, there were few banks like JP Morgan Chase, Citigroup, Wells Fargo. So these banks have come out with results. So the results beat estimation actually. So that's why the Dow future is higher, and S&P 500 future was flat but now trying to recover. Even the Nasdaq 100 is also trying to recover. But here, the last hour selling was so intense. Nifty future actually ended at discount to the Nifty spot. So there was nearly about 80 points fall in the last half an hour, I think. So usually the Friday last half an hour, it happens like this because the people do not want to carry positions over the weekend, especially when HDFC Bank results are there. So looking at the open interest, I think people are equally divided despite such a intraday falls. And today I was surprised to see 19,700 put option has the highest open interest in the weekly option. Otherwise, people have sold calls also, people have sold puts also, because next week we have only 2 more weeks for the expiry, and out of the 2 more weeks, 1 day is a public holiday. So we have only 8 more trading sessions for this expiry. So the people will be banking on time value. So now the main question is it a trend reversal or just a knee-jerk reaction to IT results? It looks like it is a knee-jerk reaction to IT results. If HDFC Bank comes out with a decent results, then things can change on Monday. So what is more surprising today, FIIs were net buyers. What is even more surprising, the domestic institutions were net sellers. Of course, the buy figure as well as sell figure, they both are insignificant. I think about 300 crore and 100 crore something. But that's not a big deal. So even these people are also waiting for HDFC Bank results to sell more or not. So anyway, October, as I've always been saying, is supposed to be a good month. And last 10 years, 9 years, Nifty has given positive return, and all the 10 years, Bank Nifty has given positive return. So if HDFC Bank results are good, then we can expect this time Bank Nifty also to do the same as last 10 years. So anyway, so everything depends on HDFC Bank result on Sunday. So maybe I may do Dalal Street Week Ahead program little later on Sunday. Usually I do it by 11-12 in the morning, but I may wait for HDFC Bank results before I am giving out my views. So that's it for now. Hope you enjoyed watching this video. Thank you for watching.